So let's move on to the next session, that is Navigating Regulatory Framework for Sustainability Reporting and Assurance. It is my privilege to introduce our today's speaker, Muskan Jain. I request CP Jain, Chandraprakash Jain, to escort the speaker and welcome her with a floral bouquet. It is my privilege to introduce the speaker, Ms. Muskan Jain. She is a seasoned sustainability and ESG professional, currently serving as Senior Manager, ESG Initiatives at InCorp Advisory, a Singapore-headquartered advisory and compliance firm. She has led ESG assurance and sustainability reporting engagements for listed companies across India, Singapore, and Hong Kong. She's a chartered accountant, ICA certified, BRSR professional, and GRI trained expert. Ms. Muskan brings strong financial expertise combined with strategic ESG leadership. She has also completed the Leadership Masterclass from Indian School of Business. Deeply committed to capacity building, she is a faculty for ICAI's BRSR course, having trained 500 plus chartered accountants on ESG and sustainability. She is an active contributor to the Sustainability Reporting Standards Board of ICAI, a regular speaker at ICAI and SRSB forums, and a technical reviewer for ICAI Sustainability Awards and publications. Her work includes contributing to ICAI's BRSR background materials and the upcoming technical guide on BRSR assurance. We welcome you, ma'am. Over to you. Thank you so much.
Good afternoon, everyone. Good afternoon, everyone. Thank you for such warm introduction, and it's a pleasure to see a lot of you still waiting post-lunch to actually listen to the session. So before we begin, post-lunch, I should not sleep on stage, so that responsibility is yours, and you will not, I will try to take that responsibility. We will not deep dive into frameworks clause by clause, but basis my practical experience of working in this domain, I would love to add insights in this field for you. And I also hope that I will be able to add value to the 1.5-hour session that has been allotted to me, and you will take benefit out of this session. So let us begin. As my presentation is loading, I want to understand from you that how many of you have actually worked in the sustainability reporting. A quick show of hands if you have worked in the sustainability reporting. I think 2 people out of the whole crowd. Okay. How many of you are looking to work in sustainability reporting space from a consultant or auditor point of view? Okay. And anyone from the industry who is seeing sustainability for their company to work in this domain from the point of view of a company? Great. So largely we have audience who wants to get sustainability reporting as a consultant and who wants to enter this field. So I will base my discussions around that. Please feel free to stop me in between to ask any questions if you have. So I don't have any agenda for today's discussion. I'll start with 2 things, why and what. So first thing, why is sustainability reporting and assurance a CA problem now? If you have followed through the previous sessions from morning, you understood that sustainability reporting is not something that has come now. From 2009, SEBI, MCA are working around some of the other guidelines on sustainability reporting. So why is that we are listening to it now, and why is a mass crowd here sitting to get into this space if it was started in 2009? So let me clear that thought around. Sustainability reporting was never meant to be a CA problem initially. But introduction of assurance, that is through BRSR core, has changed that completely. So wherever you bring in assurance into picture, the credibility of the professional is something that is looked upon by the regulators and by the company to provide that assurance to their work, right? So that is where it has now become a CA problem, and we are discussing this today at this forum. If you also see the BRSR circular and the SEBI's clarification which followed, nowhere they've mentioned that only chartered accountants are required to do the assurance of BRSR code. Yet we are here in large number. That signifies that even though we do not bring in the expertise of the subject matter right now, but we do, of course, have the expertise of the assurance, because we have been conducting assurance from ages and ages in different subject matters. And we are very adaptive in terms of covering up new frameworks. So when GST came into picture a couple of years back, we got that, I would say, we became experts in GST within no time. So CA professional is someone who is known to adapt to situations, which is why I think today we are looking at BRSR core as an area for practice, as something that we can work on and add value to our clients. Now with mandatory requirement, it is something that is, as CA professionals, we are very interested to explore. Also, if you see, there is much less reliance on any evidence per se. Now, everything in BRSR becomes judgment-based because each company is measuring it differently. There is no set standard procedure for doing anything, right? So it is not a checklist-based audit that you will be conducting. It is mostly judgment-based. And throughout the session, I will try to bring in my insights of how we conduct audit and how this can be streamlined going forward. One thing, wherever you're giving assurance, there is a reputation risk that is involved. And it is major for something like non-financial assurance because there is no standardized procedures at the company's end. So even if we are talking about assurance in this forum, a company should be ready to take assurance, right? So for us, the first step is not just educating ourselves on the assurance, but also helping the company come to a level where they are mature enough to get the assurance done. So these are the two vast areas that we as chartered accountants should be working towards. So we are helping not just the company, but also ourselves in this area. And that is what predominantly I have been doing over the last few years, that we are also side by side enriching our knowledge, but helping the companies grow in this space. Now, one question everyone would have is, what is this session and why? Why we just covered, but what is the session not? So like I mentioned, this is not a clause by clause running of the framework. I will touch upon the frameworks that you can take up as a later read, because I think in our profession, it is important to know that something exists and we have that in ourselves, that we go and read about it on our own. So I want to cover on the frameworks. This is not a theory. I will not be taking you through the step-by-step of doing anything. And lastly, like I mentioned, this is a practitioner's view on how this area of practice looks like. So if all of you are interested in taking up this assurance space for you to work on, then maybe you will find something or the other in the session. So before we start assurance can be done on something that is reported. So first step is reporting. So how do companies actually choose the reporting framework? There are n number of reporting frameworks out there. These are only a few that have been listed on the slide. But other than that, also, if you see, there are a lot of frameworks globally. Every country has somewhere adopted one or the other framework, and they're working towards sustainability in masses. Now, how is that a company should actually approach to finalizing the framework that it has to report? Now, on paper, if you see, this process is very strategic, that you have to first identify your material topics, then look up to what is relevant to you, and according to that, work on selecting the framework. But in reality, that is something that happens, okay? So in reality, there are 3 practical drivers that help the company to choose the framework. One is based on the geography that the company is operating. So for India, BRSR is something that is mandatory. So for whoever the applicability is mandatory, they will have to adopt on the BRSR framework. Now there are other frameworks like GRI, which are good to have because that gives you a lot of variety on the disclosures that you can make. GRI is something that gives you a lot of flexibility in terms of reporting. And lastly is something from the sector-specific point of view. So GRES, for example, is one framework that is helping a lot of real estate companies publish on their sustainability reporting. So when you see it from that lens, evaluating a framework becomes a 3-step process. That is the geography, what is applicable, which sector the company belongs. Now, this also creates a problem for assurances because, say, for example, the company is mandatorily into the BRSR reporting, but it is doing it only from a compliance point of view. It is not having systems in place which are ready to actually help them with the data reporting from that perspective, right? So wherever there is only compliance thing that the company is trying to follow, you will find more issues in terms of data, and that will become more challenging from assurance perspective. However, we have come across certain clients whose suppliers and customers are very much into sustainability. So they have requirements like if you do not have a sustainability report and assurance done on it, along with a reasonable rating. So they are also expecting a level of rating that the company should have. Only then we will give you business. So when it is linked to the revenue or monetary terms, it is easy for the companies to comply because they have some incentive in doing so. So whenever you're taking up new client, just try to figure out if the compliance is done from the point of view of only compliance or if it is done from any underlying motivating factor. Because in both the cases, your effort on assurance will be different. And in both the cases, your the systems and data maturity at the client level will also be different. Now, let me touch upon some of the global frameworks. First framework is GRI. This is considered to be like a mother of all frameworks in sustainability reporting. This is divided into 3, I would say, type of standards: universal standards, sector-specific standards, and topic standards. There are about 32 topic standards, and you can publish the report in reference to or in adherence to. So if you're completely adopting all the topic-specific standards, then it is in adherence to GRI. Otherwise, you can pick and choose on what data the company wants to report based on the material topics. So that will be in reference report. So your clients can either be having an adherence report or in reference report. And these are the standards that you should be knowing from a global point of view. So if you're looking to cater the clients around the globe, BRSR will be something which is only for India. GRI is something which will give you exposure throughout the world. Now, second thing is IFRS. In the initial part of today's discussion, you heard about TCFD, you heard about integrated reporting, and you also heard about SASB framework. Recently, what has happened is all these 3 frameworks were coming from different institutes, and there is a consolidation of framework that has happened to avoid duplication and to help the stakeholders easily understand the information that the company is giving. So a standardization is what has been brought about, and all of these frameworks are now merged into IFRS. You would be saying that IFRS is something which is to do with financial reporting because the name itself says it is based on financial reporting, but International Sustainability Standard Board, that is ISSB, has come up with 2 standards on sustainability, IFRS S1 and S2. Now, why we are talking about IFRS S1 and S2 in today's discussion is because that shows the intent of the regulatory body to take it from only financial reporting to a, I would say, mixed reporting. So this type of report will have non-financial parameters disclosed in your financial reporting itself. So going forward, we are moving towards that kind of reporting where these two indicators are not treated separately. You will only have one report which will also include non-financial parameters. If that is something that happens in India, then even if you are a statutory auditor of a company, you will have to know about the non-financial parameters. Otherwise, you will not be able to take up the assurance of financial statements also, because these parameters will be included in the financial statements itself. It will be embedded in the financial statements itself, making it more comprehensive style of reporting. So this is a summary of majorly used international frameworks. Like I mentioned, GRI is there, we have IFRS, and we have CRISP. Coming to ESG reporting in India. Before that, any questions, anyone, anything you would like to add? Great, so I will take the silence as no and continue for the next part of the discussion. Now, this is evolution of ESG reporting in India. Like you can see on the screen, from 2009, there was some other activity in this area that has been started by the regulators. Before BRSR, there was BRR, Business Responsibility Report. Any of you who have heard about BRR, who have worked on BRR previously? So we had at least 2 hands for BRSR and sustainability reporting. We have no hands on BRSR, BRR, which itself lets us know that at that time this was not something that had come to our profession. We were not keen on the BRR report per se. So BRR was there till 2021. In 21, BRR was replaced by BRSR, making it more comprehensive form of reporting. And after that, SEBI also introduced BRSR Core. Now, BRSR Core is not a separate report. Usually people misunderstand to be a separate report. No, it is part of the BRSR only. So in the BRSR, there are certain indicators that have been marked as BRSR Core, which means they are trying to say BRSR report is holistic. In this, these are the questions that you must and should answer, also get it assured. So not the entire BRSR report will be assured, because there are a lot of qualitative aspects also in the report. And when it comes to qualitative aspects and English writing, nobody can question that. You can be as creative as you want when you're writing English. But when it comes to numbers and facts, only that can be assured. So SEBI brought that clarification very early on of the reporting, so that when we are also reading the reports, we try to focus on numbers and not what the company is trying to say. Because there are stories out there everywhere. How much of it you want to believe will depend upon the numbers that are backed by the stories, right? So only those numbers are something which comes in the purview of assurance, which is what they have tagged as BRSR code. Now, in India, with respect to the reporting frameworks, like I mentioned, there is BRSR, which is mandatory for top 1,000 listed entities. And going forward, we believe that this number is only going to increase until they bring in every listed entity and further non-listed entity into the space. This is applicable to all sectors. It is sector agnostic. I like to tell my audience who are new to BRSR to think it like a tax audit form. There are 44 clauses, and every clause has to be answered by you, irrespective of whether it is applicable to you or not. So you tell it is not applicable, give the reason and move ahead with it, but this is a format, this is a questionnaire. While we spoke about GRI is very creative. You can use whatever standard, whatever clause that you want and report. So that makes more companies adopt GRI who are beginning with the sustainability reporting, unless, of course, if it is not mandatory for them to do BRSR. If it is mandatory, BRSR is something that companies go for. So if you want to see the leadership of a company in sustainability reporting, try checking if they're reporting even without it being mandatory to them. And the first step is to see whether they are reporting on the GRI principles, because that is something which is voluntary in nature. Then the next two frameworks you can see is from the debt perspective. So there are frameworks on green bonds and there is framework on ESG debt securities, both of which will be covered in the subsequent session by our next speaker. But I just wanted to put in a word of thought that these type of frameworks are also existing, and it is not just BRSR that you have to comply with. Interesting is to note that there are some more frameworks which are coming. These are only two that I've mentioned, but if you can Google, there are a lot of frameworks which are in the draft stage. If you could see, the first framework is on the climate-related disclosures for banks, NBFCs, and financial institutions. If this rolls out, then the work of chartered accountant who are doing the bank audits will also increase, because this is something which will form part of their RBI reporting. And for this, you need not go client hunting again, because you will already have a set client base. And you can just check with them if this reporting is mandatory to them and try to align with the reporting. So from a practice perspective, this sustainability area is not very far away from what you are doing currently. You can easily integrate that into your existing clientele and check whether these type of requirements are applicable to them. Right. So the next one is on the tax perspective. So there is a draft framework on India's climate finance taxonomy, which is issued by Ministry of Finance, and this is also in the discussion stage. If this comes into picture, it will be very interesting to see that how companies who are in these particular sectors, they have identified few hard to abate sectors like energy, infrastructure, etc. So how they are dealing with environment, social and governance principles is what ministry wants to see, and I'm sure there will be something or the other that we as professionals can add value. So these are on the all on the framework side that you can explore if you're starting with your sustainability journey right now. One more thing I forgot to mention is on the value chain reporting, which Preeti ma'am was also saying. So value chain reporting is something which means that even though I'm not in top 1000 listed entities, I expect my value chain partners, so value chain partners can be both upstream and downstream, to comply with the BRSR requirements, give the disclosure data to the company so that the company can report it in their BRSR. Just giving you an example, if you see a car manufacturing company, for example, if they are having some supplier who is selling them tires, and that is not a listed entity, it is a very small local company which is operating only in one geography. But if the BRSR reporting is applicable to the car manufacturing company, example, say Maruti in this case, then Maruti will want that tire company to give them information on the BRSR. So Maruti in its report will report on behalf of that company, which means if we can imagine, they're trying to pull up everybody in the circle. So if you're working with anyone big, or you're big in yourself, then in both cases you will be required to report on the sustainability related parameters. Now I spoke about from a supplier point of view. There could also be other point of view, that I am a car manufacturing company. I have a dealer who is just dealing with selling of cars. It can be both used cars, it can be buying and selling of new cars. They can mandate that particular dealer also, even though he is operating only one showroom in some local village, they can mandate that person also to report on the BRSR. That means in years to come, everybody who is working or doing any kind of business is reporting on the BRSR parameters one or the other way. Some will have direct reporting, some will be having indirect reporting. And this year onwards, that is financial year 25-26, you will start seeing that the companies, I would say big companies, they will publish on their value chain reporting data also, even though it is voluntary. Our, I would say Indian companies are very proactive in this space, wherein they want to showcase their leadership in some of these parameters, because it is it is coming from the side of investors, where there is a lot of pressure on them to report on this. So even if this is voluntary, they will push their value chain partners to report, and in turn they will report in their BRSR. So this is something that you can watch out for. So during the break discussions, I was having one engaging conversation on how do you find clients for BRSR. This is one way that you could, because if your company, you can check with the company if they are having any revenue or expense tied to any of the listed entities, then they might be doing some of the other work on BRSR. Sure, the teams will not be same. There will be some other person and some other team, maybe not the finance team who will be knowing this, but at least the CEO, CFO level, they will have some idea on this, and you can get in touch with them, and that is how you can cross-sell your any expertise that you want to build on the VRSR point of view. Now, coming to the actual topic, if I want to take you through the framework, that is BRSR. In BRSR, there are 3 sections. Section A, which is on the general disclosure, Section B, management disclosure, and Section C is on the principle-wise disclosure. Now, first 2 are very descriptive in nature. They will help the stakeholders understand about the company. They will help the stakeholders understand about the governance policies of the company. So it's like a pre-read for you before you go and actually check the Section C, which is the principle-wise disclosure. Now, all the BRSR core indicators are part of Section C, which is principle-wise disclosure. Does that mean as auditors you are not required to check Section A and Section B? No. So when you do the audit, there is a concept of understanding the entity and its environment, right? So this particular section, Section A and Section B, will give you an understanding about the entity. So this is something that forms as a base for your understanding, so that you can decide on the nature, timing, and extent of audit. So that is also very important from an auditor's lens. These are the 9 principles of NGRBC. NGRBC principles are not just focused on the environment. Sure, environment is a heart and soul of the BRSR report. But if you think it only to be environment, then you have mistaken, because there are a lot of, I would say, parameters which are directly linked to financials also. If I say that in BRSR you report on number of days of accounts payable, you report on related party transactions, which is something you report in your financial statements also. So to isolate BRSR to be completely non-financial is something which is not correct at this stage, because after introduction of core, they have tried to link a lot of financial indicators with BRSR as well. These are the 9 principles. Since it was touched upon in the morning, I'm just giving you a glance of the principle and we can move ahead. Now, if you're helping some company with first time reporting of BRSR, this is the first year and they actually want to see whether they are ready for BRSR or not, you can follow this 3-tiered approach, which is first help them with the mandatory disclosures. These disclosures are something which you, like I said, it's a tax audit form. You cannot leave any disclosure. So these are the mandatory disclosures that you have to help the company with. Second, you can ask them to focus on the leadership disclosures. Now, leadership disclosures will position them as market leaders in whatever they are doing. And this can be a second step. So at first only, if you tell them that there are 160 disclosures they have to make, it can be very difficult for the company to come to a stage where they are actually having that data. So starting with mandatory, moving on to leadership, and then doing the best practices what are there for the sector. For example, if it is a cement manufacturing, you give them the reporting on the clinker data, you give them what is the sand to cement conversion ratios, all of that. That can also be part of the BRSR report. So this way, step by step, you can build the company on BRSR reporting perspective. These are the 9 BRSR core principles, and this is why you and I are sitting here today, because this is something that will need assurance. Now, in last year, SEBI had come up with a circular saying that they have mandated assurance or assessment. It is not just assurance that we will discuss going forward, but these are the indicators which require any kind of, I would say, certification from a professional. So the first 4 are from environment, that is on your emission footprint, energy footprint, water and waste footprint. If you go down below the list, there is enhancing employee well-being and safety. Now in employee well-being, the question that BRSR code talks about is what is the percentage of revenue you are spending on the well-being of employees. Now, this is again a financial parameter because something you will get from the financial statements of the company. Then the second thing they are asking is on the safety. So what are the number of incidents, number of injuries, number of ill health, number of fatalities that have occurred in the organization. So both of them are number driven. Next is enabling gender diversity in business. So they are asking what percentage of your wages you're paying to females. And they're also asking on the cases of POSH. So both of this again is number driven. So something that can be verified through an evidence and audited. Lastly, in the social section, we have enabling inclusive development, which is on percentage of purchases from MSMEs, percentage of purchases within India. And they also have a section on data breach reporting in the next one, fairness in customers and suppliers. And lastly, there is openness of business, which talks about concentration of purchases, concentration of sales, and related party disclosures. The idea for me to elaborate more on the disclosures was to tell you that everything is not alien to you. There are few aspects which already we are trying to work upon while we are doing financial statements and while we are doing the audit. So there are few indicators which are already there. I think majorly we as professionals will require a lot of help in terms of the environment parameters, which is also again, there are a lot of seminars and webinars which are ongoing on the emission accounting. How do you actually report emissions? So that can equip us with all of the practical insights that we need from a assurance point of view. So why BRSR code has changed the CA's role? Just to summarize, there is a shift from disclosure to validation. You are required to now validate the data. There is a mandatory assurance and assessment that has been proposed by SEBI. And there is an increased scrutiny on methodology and control because a lot of regulators are now starting to look the data from a credibility point of view. Now, for the companies that you will be consulting, these are the major areas where we see that BRSR implementation usually breaks. So in most assignments, it is not the calculation that is a problem. If you feel that emission calculation is something which is too technical, and maybe that is why BRSR is not taking off, that is not the problem. The real problem is unclear ownership of data. There are a lot of inconsistent methodologies, even in the same company across the locations, and there is a blind reliance on previous year data. So when we also help the companies with reporting and assurance, they say, ma'am, but this was there last year. What did you do this year? We copied what they had given last year. We just changed the numbers to suit this year. They are not ready to accept that the methodology that they have been following over the years is wrong. So since this is in the nascent stage, there is no maturity in the data collection aspect. That is something that can fail the whole point of view of reporting from a BRSR perspective. Now moving on to assurance, but until then, if you have any questions, we can address them. Is this getting too technical? Any thoughts so far? Anything that anyone would like to add from the reporting perspective? Because we are now diving into assurance and we will conclude our session based on the assurance aspect. Yes, please.
Thanks for the insightful session. Can you elaborate on leadership indicators, essential indicators, and the third one was sector specific. Can you elaborate on sector specific indicators, what
Sure.
it could be? Thank you.
So NSE is trying to come up with a sector specific guide. There is already a sector specific guide available on NSE's website, where they have said that for each sector, what is the good practices to have in terms of BRSR reporting. So the format remains same, but the way you answer the question differs. Now, when we are saying, for example, one of the reporting parameter is physical output. So that guidance says that in case of service industry, you do not have actually any output. So you can take full-time employees to be your output. In case of cement manufacturing, you can take tonnage of cement as your output. So they are giving guidance on that. Now that is something which is very voluntary, right? So the companies at the first instance needs not go to that level of maturity while reporting. That is why we have put it at the last, that is sector-specific disclosures. Also, usually what happens is companies like to look at the peers, what their competitors are reporting, and report based on that, because they can have some peers who are actually very matured in this aspect of reporting. So if they're reporting on certain parameter, like for example, FTSE green revenue model. Now that is something which is not mandatory. Green revenue model is very, I think only a few of us would have heard, right? But if their competitor is reporting on that, they can also bring in that reporting in their BRSR. They can say that our customers are this, and we follow a green revenue model, wherein our, say 20% of our revenue comes from green products and services. So that is on the sector specific. When you talk about leadership indicators, there are questions like scope 3 emissions, for example. Now that is not mandatory for all the companies to report on scope 3. That is a, I would say, diving into the ocean exercise in itself. So SEBI does not want to mandatorily push all the companies to do. So they have put that in leadership indicator, wherein if you are willing to show leadership in reporting, you can very well use this additional question. So it is like main questions, it is like additional questions. So main questions you have to do, and then you can go with the additional questions for reporting perspective. Hope that's all your questions.
Yeah, thank you so much.
Yes.
Ma'am, in the slide previously, you were discussing something on ESG certification part of it. So most of us would be interested as the chartered accountants, what are the emerging areas for certification related work? If you can elaborate, I think that will be more useful.
Certification that you can take or you can work on for your clients?
Yeah, certifications, whatever you mentioned, I think it was in middle of some, yeah.
This one?
Not this. Yeah, next. Yeah. In the section B, management
Section B.
disclosure governance structure.
These are certifications for the company, sir. So if the company is having ISO certifications, if they are having any, I would say good reporting practices, they are doing GRI certifications, they are doing any other credential building certification, they report it here. So from the point of view of us as consultants, we can give them certifications on cybersecurity, data privacy, quality. So quality, ISO, there is a ISO on quality, there is a ISO on scope 1, 2, 3 emissions. So these were the certifications that the company will report here. Additional area of work for us could also be helping them with reviewing their current policies and procedures. So there is one section in BRSR which says that whether your policies are reviewed by an external agency. So that is not something that you have to go and draft. You can ask them to take up their current policies, share that with you. Implementation plan, you can check, you can go on their field check. So it is like a RCM matrix that we do for IFC reporting, right? In the same way, you can do that, and in the BRSR, they will quote your name that you have done the review of policies and procedures. For that, you do not require any additional certification. Even as internal auditors, you can go and pitch that to your company and get that work done.
Okay, thank you.
Does one framework override the other framework? For example, if company is already reporting in GRI framework and now they are mandated by BRSR, does BRSR override the GRI?
Very good question. There is no overriding anyway. It is overlap. So there can be two frameworks which are having same type of disclosures or same disclosures also, but none of the framework overrides the other framework. All of them exist mutually, if even if you want to report on 5 frameworks, there are companies who report on 5 frameworks. So there is no one framework which is like master framework or something like that.
And is there a commonality?
Yeah, absolutely. So in your BRSR, you can refer to your sustainability report, which is based on GRI. If required, you need not give the same information twice in your annual report. So you can avoid duplication. There is very well overlapping. I would say more than 70% of the disclosures are overlapped, but there is no overriding of any principle.
Thank you.
Yes, sir.
Sector-wise reporting, no, they make it in the NSC sector-wise reporting, 38 industries I think they
38
have
industries,
given.
sir.
Out of this 38, if you see the framework, they will include everything.
See, it is same, sir.
Yes,
Yeah.
GRI, TCFD, BRSR, and BRSR is the essence of all these things taken into account by SEBI and prescribed for Indian companies.
Absolutely, absolutely. But there are again companies who want to say, for example, report more on biodiversity. Just trying to say. So they go only for GRI reporting because BRSR there is limited place where you can give that information. Great. So let us move on to the assurance part of the discussion. There are 4 key terms here, which are often understood to be one and the same. I will just try to break that gap of understanding and then we will go forward. So there is assurance, audit, review, and assessment. Since the starting of the discussion, I have been talking about assurance. I never mentioned audit from a non-financial point of view. There is a reason because assurance is something which is wider in term than audit. Assurance will include verification of anything. If you are examining anything, you call it as an assurance. If you are examining the financial statements part of it, you call it as audit. So the first definition that we would have read from an audit point of view is that examination of financial information is called audit. So that is why when we pitch to our companies, to our clients, and when we talk about this field in general, it is always good to use the term assurance. That shows lot of maturity in our professional behavior also, that we are trying to do assurance for you, not audit. So that is the difference between audit and assurance. Now next term is review. Review is something which is less rigorous than audit is. It can again be for financial and non-financial indicators like your limited reviews, which is on an overall basis that you verify the information and give your certificate, that comes under review. And lastly, assessment. So in the ease of doing business circular by SEBI last year, around this time, they proposed that they want to do assessment or assurance. Now, what is assessment? How to do it? There are no guidance so far. As we speak, there are no guidance on it. But the idea is to make it simpler than assurance, because assurance is very tight-handing the professional to give the opinion on the non-financial data, while assessment is something known to be more easier for a company to obtain. Industry Standards Forum is working towards this, so I'm hoping that before the end of the financial year, we will receive some guidance on how to do assessment, who can do the assessment, and all of that. So this picture depicts the assurance, audit, review, and assessment from a broader perspective. Now, what is BRSR assurance? It is independent verification of the BRSR principles that are there, that are reported by the company. The assurance provider is required to obtain a sufficient and appropriate evidence whether the information presented is right. And this is done to enhance the credibility and trust of the stakeholders on the report. Now at the side you can see a lot of assurance frameworks that we will be discussing in the upcoming slides. Now when we say BRSR assurance, is everything mandatory? No, only the BRSR core KPIs that we discussed, only those 9 KPIs are mandatory. Again, they are mandatory for assurance or assessment. And if you see the glide path which is there on the right of the slide, it started with 150 companies. Last year we closed it for 250 companies. This year we are already doubling in terms of the size. So we are bringing in double the companies last year who were required to report, who were required to get the assurance, which means that the workload is going to increase, which means there will be a lot of professional requirement in this area. And this is again sector agnostic, profession agnostic. So when we say that there is a doubling this year and then again next year, if you see from 500, it is going to top 1,000 listed companies, which means everybody who is reporting on BRSR has to get it assured from the next year onwards. So that gives us a size of what we are targeting at and how many companies will mandatorily be required to take assurance. Other than these companies also, there are a lot of companies who actually voluntarily want to take assurance by themselves. So this is the fixed base that we are looking at. Again, these are the 9 BRSR core KPIs that are mandatory for assurance. In the SEBI circular, they have given detailed guidelines on what is the measuring parameter for each KPI, what will be the documents the assurance provider will have a look at, and how the assurance has to be conducted. Why is BRSR assurance relevant? I think we have been touching upon this since the beginning of our discussion. Mandatory regulatory compliance to prevent something called as greenwashing, so that the companies by themselves are not reporting something they are not doing. So this reduces the risk of greenwashing. It also helps in optimizing the ESG ratings. So like we have financial ratings for the financial instruments as well as for the company, based on the financial health of the company, we have ESG ratings. Now, ESG ratings are given by a lot of ESG rating providers, and there is a lot of standards around that, a lot of guidelines as to who can give rating, how can they give rating, all of that. But if a company is looking from an overall investor perspective, looking to get lot of traction from the investors or looking for funding or anything like that, they have to now excel not only in the financial rating area, but also in the ESG rating space. So for ESG rating improvement, there are a lot of steps that the company has to take, and one of them is assurance. So if the reports of the company are assured by a third party assurance provider, then the ratings are usually higher than the ones which are not assured. This increases the trust and confidence in the stakeholders. And lastly, it facilitates visibility in the supply chain, because the companies want to work with companies who are aligning with their vision and mission of sustainability. So that way, BRSR assurance is relevant for all these parameters. Now, what are the different types of assurance that you can do? There are 2 significant types, internal and external. External assurance is reasonable assurance, limited assurance. Reasonable assurance is like statutory audit, and limited assurance is like limited review. I gave this example not to say that it is exactly like that, but to give you a feel of the type of procedures that you will be requiring. So reasonable assurance is very, I would say, time intensive, disclosure intensive. It requires a lot of control testing than limited assurance. So limited assurance is the lower level of assurance, and reasonable is the higher level of assurance. In internal assurance, there is reporting assurance, that you can do an internal verification based upon the parameters that you have agreed with your client. There's also risk assessment that you can do for one of the particular parameter of BRSR, say risk assessment from employee attrition point of view. You can do risk assessment of customer satisfaction. So that could be one space that you can pick up. There will be due diligences. So in case a company is acquiring or is acquired, getting acquired by someone, you can do due diligences from ESG point of view. And lastly is the process assurance that I mentioned, that you can do the policy review, implementation process review for the company. So if you see on the right of the slide, there are the level of assurance from lowest to highest degree of confidence. So first one is the agreed upon procedures, or I would say internal assurance. Then there is limited assurance, reasonable assurance, and absolute assurance. Nobody can give absolute assurance, so that is something which is not in the picture. That is why we started only with the reasonable assurance in this case. Now, reasonable assurance significantly increases the level of skepticism, documentation, and that is why it requires more from a professional than what a limited assurance would require. These are the assurance conclusions that you can find in the reports of the companies which have got assurance. So the assurance conclusion for reasonable assurance says that the information is prepared in all material aspects, which is a positive statement. While limited assurance, we say that nothing has come to our notice, which causes us to believe that it is not prepared in all material aspects. So there is a positive and negative statement which differs both assurances. Next question, who can be an assurance provider? The board of the, so this is coming from the SEBI circular. The board of the listed entity shall ensure that the assurance provider of the BRSR core has the necessary expertise and experience for conducting reasonable assurance. Now they have not told who can do it. They have just said that it is on the board of directors of the company to decide who they want to appoint as the assurance provider. They have put only one condition, that there should not be any conflict of interest. If you're appointing anybody as your third-party assurance provider, it should actually be third-party. You cannot have any internal conflicts with the company. So these are the two statements that SEBI has given, which leaves us with these questions. Does an assurance provider need to be a chartered accountant? The clear answer is no. This is a profession agnostic, which means anybody who is having knowledge in the space of BRSR, who is having knowledge in space of emission, social indicators can take up assurance. So you will see a lot of non-assurance professionals, I will not say CAs, I will say non-assurance professionals are taking up this BRSR core assurance. There is one more question. Can the internal auditor of the listed company be appointed as an assurance provider? Any thoughts on this? Can an internal auditor be an assurance provider? No. Why no? Okay, why yes? Okay. Any other thoughts? So they can be appointed. Okay. Sorry to break it, but it is no, because there is conflict of interest. If I am an internal auditor of the company, I am required to work as per the directions of the company. So internal auditor's scope is always decided by the company. There is no framework which says that these are the parameters you will do the internal audit, right? So you're tied up to the company for your fees. So there is a conflict of interest. But if you are a statutory auditor, you are independent of the company. So you can do the assurance. You will also have the knowledge of the company like you were mentioning. It goes back to the same question, whether an internal auditor can be a statutory auditor. Can the same internal auditor be, because there is conflict of interest. You are serving as an internal auditor. So that is why internal auditor cannot be a assurance provider, but statutory auditor, in some cases, we have seen that there are same companies who are going on with the same assurance firm to give them the statutory audit as well as the BRSR core assurance. Because one, we say that we are independent of the entity. We do not have shareholding. We do not have a lot of other criteria that, as per our ethics, stop us from doing in case we are taking up the independent audit. But in case of internal auditor, I can still have shareholding in the company and still be appointed as an internal auditor. So this is the requirement. These are the assurance framework globally. So now we have to decide which assurance standard applies. There is ISAE 3000, which is by International Accounting Standards Board. And the Indian version of that is SSAE 3000, which is given by Sustainability Reporting Standards Board of India. So if you're going for a local assurance, you can go for SSAE 3000. That is for BRSR, you can follow that. But for global frameworks, or if there is any global investor demand, then usually people prefer to go for ISA. Now ISA is also in its sunset era, which means that there is ISSA 5000, which has been approved by IAASB, which is an umbrella standard for sustainability. And going forward, they want to issue a lot of sustainability standards under that umbrella standard, specific for each area. So ISSA 5000 is mandatorily applicable for assurance reports after December 2026. But till then, people are following ISA 3000. Sure, if you want to voluntarily adopt 5000, that option is also there. Now there is SA 3410 by SRSB, and there is ISA 3410, which is focused only on the greenhouse gas emissions. So if a company is requiring assurance only on the greenhouse gas emissions, then we do not follow ISA 3000 or SSA 3000, we follow 3410 as the standard. Sorry? What is it? It stands for International Standard on Sustainability Assurance. So ISA stands on International Standard on Other Assurance Engagement. So they want to bring sustainability as a specific standard rather than putting it in other assurance engagement. So ISA 3000 will be there. It is not phased out for application. It is only phased out for sustainability reporting assurance. So ISA 3000 will still stand where you are giving assurance other than now financial and sustainability. So they have modified the terms there. Next we have SSA 5000, which is upcoming. Already institute is working in this, and very soon you will get a formal draft of the standard which is in the public domain. Then for internal assurance on sustainability, this is a standard which is quite a bit ignored by the assurance provider, I would say, but this gives a lot of value to the assurance provider who are doing internal assurance. So if you are wanting to take up internal assurance for sustainability information, I would recommend that you study this assurance standard. So it is achieving internal control over sustainability reporting, ICSR by COSO. So COSO has also given us a IFC framework. In the same way, they have given a ICSR framework that can be looked into. I'm taking SSA 3000 short methodology. This is something which is applicable for all the external assurance framework that you will be taking, and quick glimpse so as to know that this is something which is in line of the normal assurance that you are doing. So there is engagement acceptance, where we see preconditions of the audit. We see whether we are eligible, do we have expertise in our team who can actually give assurance on all these parameters, whether we are able to prove that to the board, whether the board of directors or the company are willing to give that assignment to us. So all of that happens in the engagement acceptance. Then there is planning, where we are defining the materiality for each area. Now, in financial statements, it is very easy to define materiality. I will say that 5% of your revenue is material. For example, just a blanket statement I can make. Or 2% of your expense is material to me. But in case of sustainability reporting, all the 9 parameters that you saw, for each parameter, you have to set a materiality limit. 1% of emission is material. 1% of water is material. 5% of waste is material. So the materiality will change for each parameter. That makes it more comprehensive and detailed at the initial stage of accepting and doing the engagement. Then you have to identify the key risk areas. Now for a service industry, service company, the key risk area can be, say for example, water. They have no standard requirement, they have no regulation asking them to monitor water, nothing whatsoever. If you go at least by the factory's requirement, because they have to get their certificate of operation, they are required to report a lot of data on water. There are discharge norms that have been tightly regulated by the pollution control boards. But for service industry, neither water is material, nor waste is material, nor emissions are material. So for them, this becomes a key risk area for us as a chartered accountant, or I would say as an assurance provider. We have to focus more on these areas and not on employee indicators, because employee indicators, they only track by themselves. They only track what is their attrition, they only track how many females they're employing, all of that. So depending upon the sector and the company that you're working with, you will have to identify the key risk areas. Then execution. Again, all of the principles of audit apply. There should be quality control, there should be review, there should be professional skepticism, there should be judgment, assurance, skills, techniques, everything that has to be used while you're conducting the audit. Out of everything that we have spoken about, professional skepticism is most important while you're doing sustainability reporting assurance, because this is in a very nascent stage. There is no set systems, boundaries, procedures that companies following, and even if you take it from our end, there is no set system boundaries that we are required to follow. So having professional skepticism will make all the difference in your area of practice from sustainability reporting point of view. Then reporting, I showed you the format of the conclusion of the report that is there. And as per SSA 3000, there is full annexure which is given on the format of the report. So that has to be followed. And lastly is on the documentation. So like any other audit, you are required to maintain the audit documentation file. So these are the 5 key areas which are common throughout. If you follow SSAE, you follow ISA, you follow, now if you follow 5000, sure 5000 has more requirements, which we will discuss maybe once it becomes operationalized. But these are the 5 things that you have to do from assurance, actually working in the assurance field. Now there's one small case study on the challenge which I want to discuss, that is energy data which is coming from multiple plants, inconsistent units, no documented methodology, and prior year disclosure is available. So in that case, the immediate employee's first reaction is, who gave the prior year data? Give me that format, I will fill that format and send it to you. What would you rely on? You're getting one data from one plant, the other plant manager says, no, this data is not correct, my data is correct, the way I am maintaining the data is correct, the unit of measurement I am using is correct. So there will be a lot of inconsistent methodologies. As a assurance provider, this is no new challenge. This will happen in every, I would say every principle of BRSR. This was just an energy example. Starting from energy till water waste, because it is a very decentralized data. It is not coming from one single finance unit. Previously, we are used to doing assurance where the data is coming from one person. There is one central SPOC. Whatever happens, we go to that SPOC, say this data is not there, take the data, come back. When we are saying BRSR, you will have multiple SPOCs. You will have one SPOC from HR, one SPOC from the operations team, one from environment, one from safety, one from EHS. They have separate environment, safety, EHS also. Then you will have one SPOC from accounts, one from internal control. So if you see, the stakeholders who are involved in the data collection are multiple. And that is a typical challenge that you will have to prepare, very well prepare yourself before you are entering into this field. So this is the external problem. To solve this external problem, our internal systems and controls should be so strong that we are giving them one format of reporting. We are giving them the data collection training on how the data has to be collected and collecting the data accordingly from the perspective of assurance. A quick, I would say, statutory audit versus BRSR core reasonable. I've tried to compile. So one is, of course, subject matter. From financial, it has gone to non-financial. Standards, SA 200 series onwards, all of the standards are applicable. Here, like I mentioned, SSA 3000, SA 3000, ISA 3000, 5000, 3410, that is applicable. Evidence nature, financial records, ledgers, vouchers, invoices. In this case, there is operational data, procurement data. Some cases, we also rely on third-party confirmation. In case of, for example, fugitive gas emissions, the company will not monitor how much refilling of gas is happening in their air condition. It is very, I would say, in their terms, not material. Because if you see from expense point of view, not material. income point of view, not material. But for us, it is material because it's forming a significant part of your scope 1 emission. In that case, we ask them to take third-party confirmation from their vendor saying during the year, we have refilled so much of gas for you. So that is the third-party confirmation you will rely on. Then the comfort source. For financials, we have always been told by the partner who is signing, take one bill. If it is matching, it is correct. That is, evidence is the supreme in this case. But in case of non-financial disclosure, you will have to put a lot of process understanding and judgment, because even if the bill is saying that you have procured XYZ kilowatts of energy, have you actually used it? Where did you use it? Do you actually require that kind of energy in your organization? So all of that professional judgment comes into picture in non-financial audits. Lastly is the user group, shareholders, investors, regulators for your financial reporting, and everyone for your non-financial reporting. I don't want to put any user group, but all the stakeholders that feel the need to read about the company will go to the non-financial disclosure. Like I was speaking to one of the person who is willing to join, I would say, a renowned service organization from software engineer perspective. And that person was saying that I looked up the company's BRSR, saw that turnover rate, that is attrition rate, and understood whether I should be selecting this company or not. If you have 2 job offers, that is also something that people are looking at. I'm just trying to say that the stakeholders are not just your employees. The people who are wanting to work with you also are all seeing this. They want to see whether you give maternity benefit or not. How do you see? Without you getting into the company, you will not know. But in BRSR, you will get to know whether the company has maternity, paternity, what is their employee engagement activities. Everything is published in the BRSR. These are the commonly used assurance procedures. That is, again, inquiry, inspection, observation, analytical, trend analysis, reperformance, all of that, whatever we do in financial statement audit, but from the point of view of non-financial data. Challenges in BRSR assurance. Inconsistent data. Everybody wants to give one form of data to you. In ambiguities in interpretation, the clause that I interpret and the clause that you will interpret will be very different. There is limited awareness among the clients. Their teams are not trained for BRSR. We have spent years and years training the people from financial data entry point of view, but the BRSR data awareness is still not there. Lack of standardization of internal controls. We have multi-location data, so data consolidation becomes a challenge. For audit, we have a lot of tools, SAPs, where the data entry happens. Here, that is not it. I mean, there are tools, but they are not into mass usage right now. And then there is timeliness versus quality pressure. This is something that you will have to evaluate before even accepting an assignment, whether there is adequate time for you to conclude the assignment based on the data that is available with the company. I would like to conclude the whole session by putting certain thoughts, like how we can actually build a consulting role from our point of view. So I would suggest investing in sectoral ESG knowledge and materiality understanding from each KPI point of view, developing standardized templates and checklists for us, and also educating the clients on the same. Build internal capability for BRSR compliance and the assurance frameworks. For that, there are a lot of courses that are available. One such course is the BRSR course, which is run by the institute, so that could be something you can take up. There is also IFRS S1, S2 prelim course that is available. That is also something you can explore. Then there are integrating tech tools for data review. So once the systems and processes are in place, you can use a lot of tools. So there are tools just like collecting financial data, there are tools for collecting non-financial data that can be explored. Train the clients on reporting readiness. This is the pre-assurance exercise that can be done. And lastly is to create knowledge assets. That means there could be FAQs internally for your organization, that if you encounter this situation, this is how you respond to the client. Or if, say, data is not available through meters, then you take this as a secondary data. So that is something that can be created internally within the organization. With this, I would say that regulations will continue to evolve. Frameworks will continue to expand. We will have to be future ready. So that is something that is on us, how we are adapting to this new area of practice. So if you have any questions on the discussion so far, please feel free to shoot them.
Hi, ma'am. You spoke about assurance. Can you also throw some light about advisory? They tell that there are two sections. Like if I see sustainability, under that one is reporting, BRSR, and then there's advisory. So what comes in advisory? Can you throw some light on that?
So in advisory, you can create a decarbonization roadmap for the company. You can help the company with materiality assessment. You can help the company with training. So I said that the employees of the companies are not trained. That can be a scope of area in your advisory practice, that you are conducting knowledge sessions for the employees. So, and also in advisory, you can also have reporting framework. You can create the roadmap for the company, that which reporting framework you should use, what should be your reporting boundary. All of that will fall in the advisory or consultancy purview. And then you can slowly move towards helping them with the reporting.
Okay.
Preparing the BRSR report, SR report, policy review, all of that can be done.
Okay, thank you.
Hello. Yeah. I think one more accountability AA 1000 standard
AA
is there.
1000 standard
And
is there.
EcoVadis standards are also there. How those are different from whatever SAE standards we have?
EcoVadis is a rating agency. They do not have standards as of now. They just provide rating. So they have bronze, silver, gold rating, platinum also. But that is from a rating agency point of view. AA standard is there. I think in one of my slides I had mentioned that. But when I had said that what you can choose, I had removed that standard specifically because you will have to take another certification if you want to be a AA certified auditor. So it's been, I would say, governed by a separate regulatory body altogether, whereas SSAs, we CAs can use. So that is why I had removed that from the slide. There is a exam that you have to give to clear and get the AA 1000 certificate for yourself first. Register yourself as a practitioner, and then you can conduct the assurance. Any other questions? Great. So thank you so much for patient listening after a heavy lunch session. I'm truly grateful for the opportunity to the Bangalore branch for giving me the stage to speak on and share my experience. Thank you so much.
Thank you for the wonderful session. I request our chairman, Manjunath Hemallur, to present a moment to the speaker. On behalf of managing committee members of the Bangalore branch and I, Sri Chandraprakash Jain, thank you for the wonderful session, and we'll break for